Good morning and welcome to the Breakfast Club. My name is Darren Hancock and this is ThetaWaveTrader. Welcome, 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 and let's have a little look at the markets this morning. The 26th of September, that's where we're sitting. I like this little bounce off this 3 a.m. candle. I want to put in the new 3 a.m. candle. Oh, there's a lot of overlap there, hey? Did you all have a good night last night? I hope you did. Hope everything's well. Hope your families are well. Okay. Where's the bias today? If you look at the 4-hour chart, we've come back up into the order block. This is 1, 2, second stage distribution. That 4-hour unicorn's already done. 737, 714, immediate rebalance. That whole thing is 518, all downside stuff. The 4 hours acting like a here's the 4-hour. Our bull trap is holding price. This is holding price. SIBI. So far holding price. This is all immediate rebalance right here. So they're going to use this, treat this like an open fair value gap. We'll see if we trade above it. If we trade above it, and look for a retracement. It could be anywhere inside that whole thing today. At least look for 673 on the downside. This is a nice little retrace. There's a tap, come lower. So far inside this range, if you're already through the mean threshold of this here already. So take the whole thing. You're just over 50% now. If you're using the take profit model 1, pay yourself, move to break even. So wherever you were up here, move to break even plus the cost of the trade. Take half your trade off there. And wait till you get to 60%, then take another 10%. Oh, she's coming lower, D. Look for 673, 672. That's your 70% option trade entry reversal right off of here. If we break this little structure right here on a close, then you're expecting to see this to do the reversal. So then if you're going to catch that for another long again, then you want to see a long setting up in here. Otherwise, I'm looking over here, this candle, and then this. If we eat through the mean threshold of that candle, I'm looking for back here. I'm looking for these lows to get taken. Good morning, Hadid. Shepherd, good morning. Ali, good morning. Rez, Craig, good morning. There's a rejection block here. If it's another target, if it's another rule that you're following, then you should be paying yourself there. These are basically the rules we set up, so you don't have to follow them. Do your own set of rules. But whatever they are, stick to them. So now on a 5 minute, we've changed direction. 1 minute, we already got the reversal. The 5 minute, it's already finally manifest itself on the 5 minute. Now we just need to see a retrace up into here. 5 minute, and then go lower. And that could be as low as the 6 a.m. candle, which I haven't marked off in here yet. I did the midnight before I went to bed, and the open. Now let's do the, did I do the open? I did not. Let's do the open. And the 6 a.m. candle. So you got lots of little downside targets to reach for. And they line up with relative equal lows. There's a few things we're looking at here. All right, so looking for a retest of 707 to 719. Which is the top of that 6 a.m. candle. Morning, Sticks. Abs, good morning, buddy. We have our little balloon festival up here going on right now. Is yours started yet? Ours is going on. It's a small one in a little town just outside of town here. So we're my brother and he's just staying with us right now. So I think they're heading over there to see it this morning. They take off in the morning and the evening, so it'll be it's nowhere near. It's probably like maybe a dozen, 2 dozen of these balloons go into the air. It's not like the hundreds or thousands you guys get down in Albuquerque, but you know, it's our little festival. Do I trade Canadian dollar? No, I have no faith in the Canadian dollar. Sad to say, but I have no faith in it. I do like the CAD, your CAD British pound, just because that's more important for me than I like to say how much I have to pay when I go back to England, that's all. So look at this next price leg lower. We just caught the edge of our, what's the high in this, well, the close on that candle? 705, and the high is 706. And this is 705. So this hit the open or the close of this candle. So now you're looking for this to go lower. If you're looking at this level here, we traded all the way up and that. The bodies are respecting that, and we're trading lower. Now we've taken out this downside. You want to see it come back, tap this. You've got that one there. That's good for a short. Now we're looking for further continuation on the downside. Morning, Russell. Keep coming. That's a fair enough. That's good enough tag right there. It's also this next BISI. You come back up to the edge of it right there. Anywhere inside here is fine. If you're grading your response, here comes your institutional order flow entry drill. That just taps that level there. Mean threshold. We'll come back to here. It'll also be the consequent encroachment of this SIBI. So you see, those of you who are into this one here, you went to 50%, you move your stop loss to break even, didn't hit 62, came back to a retracement, and now it hit 62. Now you move to 50, it hit 70, you move to 62, and you're just sitting here right now with your stop loss above that, which chances are it's going to get hit. But that'd be it. Your internal range liquidity hunt, and then you move to the sidelines, and where it goes from there, you wait for it to break on the downside here. Get back in sync with it to run these lows out. If it comes back against you and takes out this high, then that's our market structure shift back for a run into this premium level. That's basically all I'm looking for. So there's the 672. So now we're touching the top of this level. So you'd want to see some sensitivity off of there. It's right at 70%, which is the area we're looking for it to retrace back into. Now I want to see if we start to accelerate through this, or we just turn around and start to climb back through this level. So if your stop loss is still sitting here, you're still safe. This is slowly grinding over. So if you start quickly dipping down into 75, quickly move to 70, 79, move to 75, and if you hit 88, move to 79, and then let the rest run. And then for after here, just let it run. See if it reaches for this discount box down here. That's fine. If you hit 50%, you can pull your stop loss tight. Whatever method works for you. This is just my take profit model one. If you get 50%, you may pull your stop loss and say 50%. Well, that's right above here. That would be above a a turning point, so I'm going to put my stop loss right there. I don't want to see that high get taken, so instead of just moving it to break even, your logical level, you'll start to look for these levels, and you'll start to get to say, if it breaks this, it's a market structure break, so my stop loss is going to go right there. And if I start to eat my way back through the consequent encroachment of this, I may go, that's my line in the sand, because I know if that starts to give way and we start to dig into this, there's a highly likelihood that this bull trap fails and we start going higher, because we've already reached down into an optimum trade entry reversal anyway. And you've paid yourself along the way. You've ran for internal range liquidity, and that's what you've done in the discount portion. And now you're just looking for extra little bit of juice out of the orange here. You're still good. There, boom, you hit 75%, so you'd move to 70 now. You squeezed another piece out of juice out of this here, and you just got your stop loss sitting right up there, and it's just about to tap you out. This is just following the rules. You should be out by now. No, hasn't tapped you yet. You're still in it. Now you're out. That's it. You got all you got from here to here. You juiced out some of the orange there. If that turns and reverses on you now, you're going to be so glad you followed the take profit model 1 rule and all its rules. Yeah, thanks. It's the same thing we do every day, Adi. It's the same trade every day. Now, if you're just going from box to box, you're trusting that we're coming down to here. So if you're into the 50% range, you move your stop loss above here. Now, if you're just going box to box trade, you're looking at all of this and your stop loss is sitting just above here. So if you entered in here, box, and as soon as you see it take that low out, you got to move it to break even or plus the cost of your trade, and you want to sit just above here now. Now that you've retraced back into it, you want to see that hold. So if we come back into that breaker now, I want to see that hold, or propulsion candle, whatever you want to call it. I want to see this equal. See how the closes and opens are all on that same data point. It tells me that it's got a lot more sensitivity there. So that's going to also be the consequent encroachment of, or roughly, of this SIBI. So you're sitting up here, and I'm aiming for down here. That's take profit model 2. Take my profit model 3 will be, I entered in here, and I'm waiting for the first SIBI to get broken to the upside. That one does not. This one has not. So you're going to stay in this all the way through this if you have to. You'll pay yourself a portion there, but you'll just keep trading until you have a SIBI that's broken to the upside. and then you get out. And keep your eyes on this level. We're going to say from there to there. And if we include all of those, there's a whole bunch of little ones down there. I think the last one's sitting right there. Yep. So anywhere inside here is fine for me. If you're going box to box trade, there's multiple boxes on the way down. So you'll see how you tag the first one, second, third, fourth is down here. And the last one's right here. Is that one there? Yeah, there's a little tiny one right there. Eric, good morning. Oh, Derek. Eric. Derek, how's everything? How's Spain, my friend? How's the sunshine? How's the beautiful country of Spain? How you doing? Yeah, Craig, if you go with an internal range liquidity hunt like that, when you get to 50%, at least if the cost of the trade is paid for, no offense, but it sounds to me like it's more of a fear of losing your money is why your stop loss goes so tight after 50%, just because you're afraid of it turning back on you, and you don't want to lose it. And there's a lot of chances, there's a lot of times it'll come down to 50%. You're absolutely right, and it leaves. So unless you've got a strategy that you're looking at, or an objective you think it's going to go to, and places where you think that will support, and you have your stop loss, you can ease up on your stop loss a bit more and just follow a logical strategy and see if it pans out for you. Because in this case, if you would have hit 50%, you would have been out of your trade and you would have missed an opportunity to catch all of this here if you just followed that simple rule of just move your stop loss. You got to give this a little bit of playroom here, and that to me is the order block. I'd say if I was coming back inside this range here, this small little leg, and there's 50% of that, I didn't want to see us get through here. So if your stop loss was at break even plus the cost of the trade, you wouldn't want to see that candle getting attacked. Sunshine never stops. Beach, though, is wild, topless, bottomless. Just everyone is chill. Culture shock for a conservative American. That's awesome. You're probably one of those old guys sitting there with your holding up a newspaper with two little holes in the middle of it. And you have to rest your arm on a lawn chair on either side just to keep your arms from tiring. Yeah, it's a culture thing over there, man. Nobody's afraid of their body. The human body's not something to cover up and be ashamed of. They certainly love showing it in all its glory, whether it's old, young, fat, skinny, they don't care. It's their body, man. They'd be proud of it. They don't bat an eye. So here we are back into this level, 684. Let's see if that holds. And there's the consequent encroachment of that. See how you hit 78%? It would have come back to 75 and taken you out. It's important you kind of look at that. Just from that take profit model, you would have been right to 75%. It would have come back to you at 70 and you would have been out of your trade. It would have reached down to 78. That's the only little piece that you wouldn't have caught was down into here. That extra little 75 to 78%. And now if it's reversing on you now, there's an immediate rebalance right there. That makes that a SIBI. You break out the candle, look to the candles to the left, and it just closed above it. That trade would be closed if you haven't already done so. If you're just doing a box-to-box trade right there, it would be closed, because now you've got a little structure shift, and now you're back inside this range. Unless you're playing, I want to make sure it stays above here. That's a bigger structure shift for me. That's fine too. I suppose another way you could do that if you're doing a box-to-box trade is, as soon as you see this happen and you trade above it, take a portion of your trade out and leave the rest sitting above here, because that's more of a significant structure break. And we'll see if we get a continuation. If it starts to come back up and close this in and start to dig into this more, you can close out the last portion of your trade. But you want to know if this is going to be a bull trap, right? Because if it comes up here, stops, and then rolls over and goes back down, you go, I got out a little too soon, right? So you'll have to adapt your rules in there and how much of your profit you're willing to give up on this little return before going lower. So see how where that area is becoming sensitive again? Right there. That's 2, 3 candles there off that. 1, 2, 3, 4, 5, 6, 7 levels. 7 levels. So 7 times we've hit that level, and you found some sensitivity there. Look at the 15-minute chart there. I would like to see 15-minute fair value gap hold. Well, there you go. There's the mean threshold right there. You don't want to see this. You want to see this candle leaving here now, not coming back down. So half that wick is all you want to see that come down to, which is right there. And you want to see that leave from here, start going back up. That's your support level. You don't want to see it coming into this wick some more and start to dig down into that mean threshold of that candle one more time. You don't want to see that. If it starts to eat through that on a 15 and close, then look for this down here. So this is good. You want to see that accelerate from here. That's good. You want to see that continue to accelerate. I'm with you, Hadi. If you, I'm like slightly bullish inside, or I'm bullish inside this small range, but I'm not bullish until we break back above here. Then I'll be like, yeah, okay, we'll get back in sync with heading for that 3 a.m. candle again. It just seems that it's an over 50 thing, though. None of the youngsters hang out there, though. Yeah, that's probably true. They have their own beach. They don't hang out with all the wrinklies. Long a small crude oil. Still swing with all the noise going on. Looking for 785. Oh, you want to go higher, Hadi? Yeah. I'm all for 785, man. If we can, if we start to see on the lower structure. Right now, I see nothing but downside, downside, and this is right now. If I'm not finding it, we want to see that's got to be the support there. Because if this starts to fail, then where's the hourly put us? 650. That puts us right back in here and right back into that breaker or mitigation block. Yeah, it's a mitigation block. Let's see if mitigation holds. Yeah, so you want to see that if that had some strength, you want to see that just start to accelerate through here. Let's go. Oh, I got no trade yet either. So that's your internal. I love that take profit model one because it is a real quick way to eke out some cash out of the market when you're in, when you've got an internal range liquidity hunt. It's a quick way to grab yourself some money and be relatively safe doing it. Then you start going into take profit model 2 and 3. You got to look for things like direct runs and watch for these levels to either not exist or for us to trade below them and find support at them and continue to accelerate. And look for that discount array. So we're still looking at this candle here. It has to, or these two candles have to provide support. The last one's the most sensitive for me. So the mean threshold is the line in the sand here. And we're still banging off of that sensitive level. Mean threshold, or combine the two, or take the whole candle, whatever you want. Put your stop loss above that high We're above here, like we talked about this being the market structure shift. See how we're digging back down in here? It's got to hold. This is all fluffing around here. We don't want that. If you want to go higher, that is. So you just wait, because we have no certainty about higher or lower so much right now, other than we are lower. We are lower. Sorry, we are lower. And there's a small little civvy right here on the 5 minute. We've closed above it here. We've closed below it. So you got to wait for this candle to get taken or this low. Now you're in a waffling situation on the 5 minute chart. We have a slight turn on a 1 minute chart. We found support off this candle's mean threshold. We traded above it. We've come back into the mean threshold. You want to see this hold, keep pushing higher, and you want to see that right there. It's mean threshold or consequent encroachment of this wick to hold and keep pushing higher. And right now we're stuck inside that range. Pull that small little range right there. We are sitting at 50%. Strangely enough, lines up with the same level we're looking at right there. Is it a data point? I don't know. What do you think? Let's put 830 level for D in here. 830 right here. I would like to see them run out this liquidity here and get back down into this discount box down here. Near the open, the markets tend to pull back towards the previous day's close. I have a question, D. I'm looking at red 4-hour fair value gap above us that we wicked completely with the current 4-hour candle. Do you still consider that fair value gap relevant, or is it mitigated? Full body close needed. Oh, I see what you're saying. Yeah, it's been fully closed now, but it's I look at those and I can say, are they an area of sensitivity? Are they an area that you can rely on again for support? Those data points are not finished now, even though it's been rebalanced. It's not you don't ignore those data points. So I don't go so much into a rebalanced type of idea. I just go into how often are those data points touched and used as support or resistance. How often are they used to support a price going higher? So for that little fair value gap you're looking at there on the 4-hour chart, let me put it on here so you can see what I'm talking about. This one right here, right? You've traded right back. Are you talking about this one right here? are you talking about this? That's a rebalance. This is rebalanced. But I look at those, this, to see this whole giant rebalance here, that's all immediate rebalance. But that doesn't, so I treat that like it doesn't exist. And I go, that's a data point 1, a data point 2, and a data point 3. There's 3 different data points in there that I look at. Or you take that and split it and do the quads and do 25, 70, 50, 75 in the bottom. That'd be like 5 data points. 1, 2, 3, 4, and 5. So there's 5 data points in there in total. Same with this one. I just look at them as specific points that I'm looking for. And those fair value gaps and inversions and volume imbalances, price imbalances, they're all the same thing. I just look for little tiny specific points inside them. That's all I look for. To me, it doesn't matter if it's rebalanced or not rebalanced, where there's a big bold candle that comes in and finishes it off. It's still a vital area. I cut through all the candles and I look for that area again. And it works over and over again. That's why Michael cuts through candles. That probably didn't answer your question, but the fact that it's rebalanced doesn't matter too much. Just say it came back up, hit that data point, and then reject it off of it. I'm cool with that. Because the overlapping data point there would be this one here and that one there. You see how it hit the bottom of the last up close candle? So 1, depends if you use 4 in here or not. 1, 2, 3, 4, 5, 6. There's 6 data points in there, and just goes doot, 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 hits that one, comes back down. You can't say, well, yeah, they're all going to touch eventually, but where does it touch specifically? It could touch anywhere inside that thing there, if that's true, but it's just hitting right on that data point and then kicking off. So I don't know if that helps you or not, but at least that's my interpretation that I see of it anyway. See how this little level here is holding price? It's a beautiful thing when you see it, man. Now we're looking for, see how we got a small change in direction right here? It comes back up. We're popped above it. So you got to wait for a structure shift. You wait for this, tap into here, look for continuation. And I'm looking for box to box. If you're still box to box trading, you're still in your trade. You still have not had that SIBI traded through on the upside. This little breaker here has not been taken. This candle has not been taken to the upside. So if your stop loss is sitting right here, you're waiting. Or you took, remember we took a portion off here. We saw a little shift. You see I'm taking a portion off there. Let the rest ride. Now you're back into riding again. Now you can move your stop loss above here, because there's little fair value gaps that could get broken and a market structure shift there. So your market structure from there shifts to here, and we're still aiming for our downside objective. Or if that's too complicated, just go box to box and wait. If it works, great. If it doesn't, it doesn't. As soon as you get past halfway, pay yourself and move your stop loss to break even and wait and see if the patience enough to wait through all this to reach for our first little chart. I'm talking about the most recent 4-hour fair value gap. Yeah, that was this one. Yeah, it was the one I was talking about, was it not? Yes. Okay, rate of response, yes. 832, 1 minute candles. Oh, and there we go. Box to box, done and dusted. Next one is down here. I'm looking for that 542 one. This is the level I'm looking for over here now. So you look over here. Now if you take your box to box, you take a portion off there and let the rest ride. You got in from here. You pay a chunk there. 80% of your trade is off, let the rest run. Or 80% is off, sorry. At the bottom of all of these and let it run. Now I'm looking for this little discount box here. This one here, we just hit that one. Now look for this one. That's just being hit now. There's box to box, box. All these discount boxes here. No, just want to see that big run down into 542. This Thursday's first presentation. If that just comes down into here and bounces off of that, that's a full fill right there. Oh no, it's not. It's into the consequent encroachment of this. Retest old low. All the way into that candle. So if it eats through that mean threshold of that candle, and I get back up on top of this one, or come in here, anywhere inside all these little fair value gaps that we've just encapsulated into one big one, if that rolls over and comes back down again, or if it rolls through there like it's doing right now, were to come back, your stop loss is over. Stop loss is taken, so we wait for this to break to the upside now. And it's 9:30, so just wait for this whole open range to establish itself. No opportunity yet. Don't chase it. There's finally taking the highs. So you see how you got to pay yourself at your first one, your second one, your third one in here, fourth one. You just keep paying yourself at each one of the inversions till you run out of cash. It comes back and takes you out. You got paid all the way down in that. Great way to get paid, man. And if it rips back against you like this, there's very little left in your trade that you haven't got money in your pocket already, and you're still moving into profit. So even if it comes back and takes you out, you just don't eke out the last little piece you're looking for down there, which is with 10% of your money. If that makes any sense. So you see how to get a body traded above these highs? We've come back into the mean threshold of this candle again, and now we're going higher. So that's a nice little change in direction. Here's your first presentation for value gap now. That's a nice little entry right there. Continuation to the upside. It's 9:30, so we'll just kind of wait, see what happens here. That's too big a wick to call any hold there, Hadi. Or you're looking for this area up here to hold. Yeah, we've never been there. That could hold it and reverse on you now. All the way up to here. Well, that's way out of range there. So we could come all the way up to the consequent encroachment of the Mark III above us at 790. There's another retest. you look at your 15-minute, here's your discount box right here. Now you want to see it trade through this level and get on top of this and start going higher. If you look at the hourly chart, it's coming back up into an area right there. Right where it's just tapped to find some resistance and come lower. That would be typically what you'd be looking for, but that can go from there all the way up to here. That consequent encroachment. So from that point to that point, it's all fair game for a reversal. And that's right at that level. And see how we're eating through this candle, the mean threshold. That's what you wanted to see tap and go. And now it ran higher, took out the high there, pay yourself a rejection block. Then all of a sudden it's coming back through. You don't want to see this come back into here. And then it went back up, then it's ripping through it again. That means we're coming back down into here in this order block, I think. It's got to get back above here for me to go bullish. This could be a nice price leg. If we start breaking fully above here, that would be the next price leg higher, which would push you way up into here. Be prepared to change your mind, you guys. Don't marry any idea. Just watch the horse. Stay on the horse. If you throw a bunch of opinions out that don't mean anything, you have got no support on them, then they're just opinions. Find your support levels, and if they break, change your opinion. You got right on that mean threshold. Wait for it to break here. So this was your first little bull trap. Didn't work. It's holding. The mean threshold is being drilled into right here multiple times. They're weakening it, as it were. That's the ceiling you want to drill into, weaken it, and then bust through it. And then start looking for the support at that level. Get on the other side of it. Stand on it and run. Run for that premium level up here. Yeah, looking for the 758 to 772. $758 to 772. That's right up here. That would put your next price leg right. $758 to 772. That puts you right on that range. That's where that next price leg's headed. As soon as we break above that high. Did you see a 15-second reversal there? Right here, right there, right there, right there. Nope, there's not even a 15-second one there. It comes back to that one there. There's nothing on a 15-second. Unless you're looking for this one right here. That's it. Or you just keyed off at the 15-minute fair value gap. SIBI there. We're below this level now. This now becomes the new breaker. I want to see that hold price now keep coming lower. That's why you got to follow the rules, man. This is, if you're all hunting for that higher stuff, got to break through that level, man. If it doesn't do it, this is where you get beat up, and you got to follow the rules. Get you confirmation above there. When it fails, you're on the wrong side of it. Get back in sync. Looking for this guy down here. It's mean threshold. If that gives way, look for a run into here. There's the retap. Now you want to see that just whip out of here and go higher. If you pull 50% of that range. That's down here, and that's right on top of that first SIBI. So we'll see if this gets reclaimed to go lower. And then we're on between these two. That's good. Now you want to see a body close above here, and then ignore all this. Use that again as support to go higher. Wait for that to close, and then you're looking for that again to close above this level. One, perfect. So all I wanted to do is just come back and give our little guy a kiss right here. Now we've got a new highs. Wait for a body to close above that. This may just straight run it from here now. That will give us there to there. 772. We were looking for 772. Wait for a body. I'd still like to see this get taken out here. And just all this chop, I'm not playing. Just wait. There's the reclaim. Remember I said you want to see it trade through on a close, come back and use this as support. There, ran up, now we're eating through it again. Too much chop for me, man. Too much chop. We'll see where that closes though. If it still closes above here and the wick is just doing some damage, you want to see that hold price. I got 25 seconds. Just wait and see where it closes. It's definitely mucking around. I'm looking at this level here. I still want to see this get taken out. I know you guys want this to go higher, but see how this 15-minute is freezing right on that level? And we've whipped through it already. And we're just banging around inside that right now. And we've already torn out this level, gone down to the discount box, reached all the way through to this discount box. There you go. Let's finally hit this level here. A lot of chop in there, hey? A lot of chop. You got to have your rule in here for how do you manage this if it violates the 50%, even if that's a data point for you. So basically what I'm saying is I have to develop a rule for myself that says if I come down, hit the data point, and I get wicks and stuff getting through it, I want a clean level, tap and go. Right? I don't want to see this, like right here would have been fine. Broke above it, come back down, tapped it and go. That's what I want to see. Coming back to revisit it, I'm out of the trade. If it goes above it, then I'll wait for a structure break and wait for another opportunity because it's not the only one. So now this whole thing's been rebalanced. It's been worked from above, and it's now come down to the discount portion because that's definitely more than 50% of the small range we just created. From here to here, you're below 50% and you reach back into that discount box. Now, are we going to make a run higher? Wait for market structure shift. Friday, Friday, Friday. We're drilling holes in that roof. It's a 6 a.m. candle as well. It's like a big hunk of concrete. You're just drilling into it. Drilling, 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 poking holes in it until it gets so weak that you can blast through it, find support at this level, and then keep going higher. And don't look at the candle while it's forming, because that was a full bold green candle, and you probably said to yourself, it's going higher now. Then snap. It snaps back on you, and you go, oh, it's not going higher. It's a psych candle, man. It's psych you right out when it's in a full green candle like that. You're like, oh, it's going higher. Now look at it. It's retracing again. You're like, oh, it's going lower. Ignore that candle till it's finished working. That's why you got to wait for it to finish, because we're just drilling holes in this thing here. Reinforced concrete. That 6 a.m. candle is holding. Abs is sitting there going, man, I tell you about the 6 a.m. candle. Did I ever tell you about the 6 a.m. candle? It's going long now. Look at it. It's a big green candle. Yes, incoming macro. My phone should be going off. It's going to start spooling. So if we get above this on a close, I like this to spool from here. And it's got to break. It's got to get below here for me to be interested in that going lower. And it's just in Chopsville right now, so I'm not interested in any of that stuff. And maybe if we get above here, use this as support. Once we break through here, find support at that, run through here, find support at that, and then look for running higher. Otherwise, that internal range liquidity is already maxed out at your premium array right here. Did you guys mark off your 6 a.m. candle? Tell me that's not an important candle. Look at that sucker. Getting chewed and tattooed. Now it's going long. It's green. It's going long. There, finally touched the premium box. Discount, premium, box to box. How's that for a quick trade? Did you wait for your opportunity to say, hey, man, I'm not taking this. I'm going to wait for 1, 2, 3. 3 levels of entry. And I'm going to aim for my box there. There's my 1, 2, 3 levels of discount or taking a scaling out. It's box to box, but it is really ugly. It's like the Cinderella trade, right? It's ugly, but it gets there in the end. It's got a lot of ugly sisters moving around in there, but she gets there in the end. This should automatically tell you, Russell, don't even look to catch trades here. Don't chase anything unless you're willing to. You're on a higher time frame and you're still at key levels in your higher time frame that are being supported. Then this doesn't matter to you. You just switch over to your higher time frame and stay there. And if you see one of your levels get violated on a close, then move to the sidelines and take the loss. Discount inside this little range here. Now you want to see it pop all the way up into this little tiny one sitting right here at 6.99. Or you start to drill through all of these candles, and this super strong breaker who's done his best to fight off all of these attacks, its mean threshold, finally got popped through here. And then they put a bullet through the wall, and it finally hit the target on the other side. So this thing has done its best to ward off attacks. It's been eaten through so much now. If they just run out of ammunition and that peels over, we'll wait for this guy to get taken. And you want to see another, well, it did get through here. It got through there, found supported that. You see this one right here? You go there to there. I guess you have to include that guy there too. We went into it, through it, through it, through it, through it, tap on it. Now, is this the point? Now, this is kind of interesting little observation here. We have this constant chopping back and forth in it, but when it finally uses it clean, look at that, low, consequent encroachment. Is this the launch point here for this finally to break through here? There's the 699 level. I want to see if this right here now, because finally it's acting off clean points. Boom, boom. And now it's looking for, is this the point at which it goes higher? Mean threshold. That's a clean point. If he starts wicking through that, then my theory is shot to shit. There you go. Forget that noise. That one has not been tapped yet. 1, 2, 3, 6, 8, 1. I'm going to watch 681 there. O for O is a great place to be, man. That means you made money today. You made your money. You kept your money in your pocket. That's as good as making $1 million, man. All the time it's there. Do you recognize this is choppy and this is not acting the way you want it to act? You can try and engage that. You can try and scoop money out of that and pat yourself on the back for doing a great trade, but there's nothing in here that's clean. Nothing. On a minute by minute basis, that is. On a 5-minute basis, let's have a look at a 5-minute chart here. Five-minute chart. We trade below it. We trade back into it, into it, into it. That premium level there. It's getting tagged and it's finding some resistance on a 5-minute chart. 1-minute chart, that's our upside resistance. And the discount box is on the 5-minute chart is down here. So if that upper box holds, then we're looking down here. If we don't get through that on a close, then look for a run below here and a dig into this one. And I'll get right through our regular trading hour gap and aim for our discount array. That's a full fill of that. Swing point, change in direction, full fill. We're through the 699 level. So you're bullish right now. All time you have support here, you're bullish, and you've taken out this premium box. So let's wait and see if that closes above there now. It did. So now you're bullish. Targeting this high and this fair value gap above us here now. This guy's been shot so many times. And he's still trying to hold the guy back. That's hilarious. Your mean threshold is gone, buddy. You can give up now. Look at all the shots taken at him, trying to get up there, and he's just holding back price. He fails. This is the next backup guy, trying to hold him back. Bull trap here, bull trap, bull trap, bull trap. This bull trap, it worked, and then all of a sudden it didn't. Then we come back to this guy here, find support. You want to see this bull trap hold again. It is somewhat holding. And now you want to see this one to hold. And that one's been taking multiple shots. And now you want to see a body get above that level still. Still no body there yet. Lots of wicks. Still no body above that level. Is that your rule? Are you chasing this? Are you in fear of missing out? What's going on with you inside all this? Or are you just totally calm and saying, that's just too much chop? This is the kind of price action you want to see. Nice, clean, body breaks above, comes back, taps it, and leaves. That's the kind of stuff you want to see. You want to try and pick your winner out of here? There, finally hit this level here. So this was the turn here. Or sorry, right here. The turn. We wanted to see 609 or 699 get taken. It did. Look at that, 699. It comes back and tags it perfectly right there. Gives you one more little tap right there, and then finally goes higher. So there's your continuation from here. Tap, 699, tap, tap, go. Now you want to look for this to close up here above that level. Now I want to see 6 a.m. used to support, or we'll see if we close above this guy here. So what you want to see now that you've run through your premium level, is you wait for premium level to get closed above. So right here now I want to see if we come back and tap this. or this. Or if we can get above that, find support, then look for a run higher. You took a trade in there, Hadi? Wow. There was no A plus setup in there, man. There's the retap of the high. Is that a retap of the high? I don't think it is yet. 716. There. So think about all these highs are taken out and watch this level right here now. You want to see it just come back and give this a little tap. You're through the mean threshold of that candle already. You've traded above it, and look at that. We're eating through that mean threshold there. This is not clean price action. See a retest of this level and the open right there. Now you want to see that go higher. You don't want to see it close below here. See, it's losing. This is the graded response, and it's just not working the way you want it to. It's not acting the way I want it to act. So I'm not even the mean threshold. So we've gone through that one. We've gone through this one now. Now if it sweeps below here, we're getting back into a run lower again. There's no clean setup in there. $15-second chart. Let's look at a 15-second chart. Traded above it, traded below it, above it, below it. Discount, you never got a discount. I don't see anything super clean in there either, except for, no, you don't even see that. Change of direction. There, trade through it, discount. There's nothing clean in here, bro. I'm sorry, I don't see anything trade worthy in there. Nothing, even that looks like crap. This is going to beat you up in here, folks. Be careful. This exactly sticks. Now you want to wait for 15-minute. See how we've traded closed above that level again. 15-minute, you want to see it come back into this candle one more time and tap it right at that high, which is right where we're sitting now at 672, which is back into that guy. See how we've traded below that level already? We've come back, tapped it. I want to see that come lower now. That's definitely discount. Mean threshold, and then rejection block. No salad day today, man. This is not. This is eggshell in your omelet day. This is that crunchy piece of eggshell that just annoys you while you're trying to eat your omelet. Your internal range here, you've hit the premium level. You went through it, looked like a great, can we continue on? Didn't, trade it back through it, move yourself, and you've got to keep your eye on that level. And you say, as soon as it trades through that level, I'm on the wrong side of this. And it's confirmed the moment I break this on the downside, and we have. So, And unfortunately, it's in a huge candle, so it would have ran straight to a stop loss. So there's our change in direction, or sorry, change in directions here. Continuation is right here. Took out the discount box, used the discount box to leverage running lower. Now I'm looking for this mean threshold. It's through, looking for that low, looking for this rest of the SIBI here to fill. There's the low taken now. There's your confirmation right there. And now we're running back in here. There's nothing in here worth playing. Yeah, you can see some little turns and stuff, but just stay on the horse right here. Use it as a opportunity to learn where price is going after all this chop. Quick run to upside premium liquidity, and then quick run back down to discount liquidity right there. Sorry, that's the level right there. Done. Now we trade through it on a close. Come back into it. 49 seconds. If it's just got intention of going lower, you wait for your next opportunity to get on board. Now it's not chopping around anymore. It's got a direction, right? Looking for down here still. Anyway, that's where I'm looking. Been wanting. I wanted this to take this for a while. I just didn't anticipate all this chop. There's the rejection block. Did you pay yourself at rejection blocks? If that just reverses now, oops. If that reverses now and goes all the way back up into this candle, which is these three candles are a breaker, takes out their own high. I want to see this come back into here. And what's this one? Oh yeah, that was all those little SIBIs on the downside. So you can come back into the bottom of that one. It's fine by me. Anywhere inside this little cluster. A retap right there. That's 1, 2, 3, all the way up to there. And then you want to see it go lower. If it trades through it. So now, as soon as it gets to here, go to your 15-second chart and look for continuation or reversal. So right here, I'm looking for that to hold price and this to roll over here and come back down. And there you go. Come back up, tap it, and then sell short there. I'll try that. My stop loss is going to go right above there. If I'm wrong, then it shouldn't break that high. Pay yourself when it gets to that low. I've only got one on there, so I'm going to pay myself at the low. Follow the rules like crazy now. So now I want to see it. If it comes back and taps it again, you can do another one short. Now I've got this. See how we've taken that? It's not. Did it take the low? I don't know if it took that low or not, but see how you've got overlap here? One wants to go higher, one wants to go lower. You don't want a body to trade through here. Otherwise, we're back into consolidation, and I'm not interested in that. And it's 10:10. So silver bullet time. Let's see if we can get a body above here. So I've got a change in direction, Body's now closed right above that. Come back, give this a little tap right here, and let's see this take out this high. That's good. Right there is your continuation. If it trades back through it, let's just slop. That's just not what you want to see. Right down to the bottom of this one here. In the higher time frame, that's the 1 minute you want to see hold price and keep going lower. Come back into here. or here. It's going to range extend. There you go. It's range extension. So now you can keep going lower. You can come back in there and tap that one more time at 620 all the way up to 629. Now you don't want to see it get up on top of there. Otherwise, we got a little swing. It's traded through here already. And don't forget, on the higher time frame, I said I want to see it get all the way through that 1 minute, which is over here. I'm still looking for my 1 minute candles. Looking for all this to get taken out. And my discount box is sitting right here at 579. Look at that. Ran through it, came back. Perfect little kick off of that. Ran lower and extended the range. Pay yourself. From there, 638 right to that low there. Rejection block, low. 638 to 9. So you got 38, 39, 41 handles from there to there. But that's a rule. You got to follow the rule of pay yourself there and pay yourself at the next low. And if your stop losses move to the previous pay, you're out. Nice little trade there, Craig. Remember 620 on that 15-second chart? 620. We want to see a retest of this one and that one right there. Boop. And run lower. Keep coming. Keep coming lower. Run for all this lot here. And our 15-minute, I think we're looking for in here, were we not? Yes. 544 to 534. Five four four 534. There's a tap of this. Come lower now. We'll see this candle hold price. Mean threshold. That's your little structure shift, and then the next structure shift above you. So your premium is above here, your discount, premium. Get a close above this, looking for your premium box. Get through the premium box, look for higher prices. We're just trading back up inside that range to here. 616. I didn't want to see it get through here, but it's just pulling back into that range. Fair enough. The open of that candle. Midnight open range high. It's forcing you to trade indices. I'm learning in here slowly after 3 years. That's okay, Craig, man. You take your time. It's not a race. It's not a race. Keep coming. Keep coming. 543. Wait for the structure shift. This could be one of those bull traps again. That's why you wait for a decent, and you get 1, 2, 3. They're all kind of overlapping, right? With a premium sitting right up in here. There's a midnight open. Nice little tap, a midnight open. Now on a 5-minute chart, look where we hit it. We're hitting right. We traded below it. You trade back into it. Now you're looking for this to go lower. If it trades back through that, then I'm looking for a run deeper into the range. So right there, you're looking for precise continuation on the downside. So in other words, you want this bull trap to hold price. They can come all the way up to right there where it's just hit. Wicks are not fun. I don't like wicks. Oh, I'm just looking at this BISI here. From here to here. Still want to see that hold. Is this the first presentation fair value gap today? Yeah, okay, there it is. That also lines up with what? The top of this SIBI here. Change in direction right here. We trade all the way back down into it. Rejection block has been hit. Bull trap is still holding. Albeit a little shitty wick. Still moving in the right direction. Watch for it to close below here now. You're looking for the 563 Hadi. 563, my friend. Or 562, whatever that candle's high is. What's that candle's high? 561.25. 561.25. See how it's all choppy again? Not interested. Not interested. You've run out this low on the 5-minute. So if you want to see this get higher, it's got to get back through this on a close and start moving higher. $588 to $587. What was this? $583. Okay, so that's already through that discount box there. It's already taken that out. $579 is the mean threshold of this candle. $580. So we're just shy of that. But we're bouncing off the midnight open. Midnight open. The 4-hour inversion is keeping price down. Well, the 4-hour breaker is holding price. If you look at the 4-hour, we're inside that fair value gap again. If you look at the immediate rebalance on the 4-hour, it starts here and goes to here. And we're just banging around back inside that. We have traded above it now. So this could be just a simple retracement all the way down into 519. If we close below 519 on a close, we're looking for range extension. This could be a A nice little run into October. But we got to get below 519. That's my thoughts on a 4-hour chart. It's a good day not to trade. It's a good day not to trade. This is just going to do nothing but frustrate you. Or it's going to reinforce behavior of invincibility if you think you can trade this and be successful. And if you get some successful trades, and believe me, there are some clean trade entries, but it's just going to give you the idea that, you know, you can survive through chop. You're invincible, right? And you don't want that kind of stuff. So we see how we've traded through here on a close. We're coming back into this candle's open, the SIBI, and you want to see it push lower. So that's going to be your line in the sand there. Also with your midnight open range, first fair value gap. See how that's been utilized perfectly here? That's nice, clean. Now you want to see that keep coming lower. Just keep pushing. Like that's a nice, clean point there. You've just taken that low. Pay yourself. I'm not saying you're in here. You just stay on the horse and just watch these key levels and watch how they're being used. That's all. And if you say, oh, it takes off, oh, I missed out, who cares? These things happen every day, every week. There's plenty of opportunities here. You don't feel like you have to keep getting trades in here. Just practice. How good can you get at reading price action? And where does it fail for you if it's starting to go back the opposite direction? And see how those levels to provide support. And spend less time worrying about making a buck here and stay in the chart. This is just me talking to myself, really. It's not about talking to you guys. This is me just telling myself that. There's the retest again. And this, you don't want to see this again. What's with all this? Chop, chop. Let's go here. Leave. It got your low. Booyah. Great. But there's a little tiny imbalance here right now. And we're back inside that. So inside this range, you're slightly bullish. Inside that range, you want to see this mean threshold give way. If it holds and I trade back through there, you're getting more run for the low. Support, keep coming. That's good support. There you go. Keep coming. Give me my freaking 534 so I can just peacock around my house. My wife goes, what are you doing? I knew it. I picked this spot way back here, said I wanted to see it, hit it. Just waited forever for it to get there. 534. Where's my carrot? My beloved carrot. 534. Come get you some carrot. Oh, look at that. You put it on there and it says, where's the carrot? It's been looking for a carrot the whole time. And there you go. The moment you put it on, it says, give me the carrot. I want some carrot. Carrot or stick, man. 543 to 534. 534, 543. Done and dusted. There you go, my friends. I got my level. I'm happy with that. Good enough for me. I take my imaginary trade off now. Yay. Shitty way to get there, my friends. Shitty way to get there. But now we're just waiting to see if this closes below here. 534. Ba-boom. This Hadi. Well, D, time for me to sneak a nap. Oh, I thought you were going to say sneak a peek. I know what you're up to down there, Derek. I know what you're up to. Time for him to sneak a nap here before Eric gets home. Messy stuff. Would like to see something a bit more clear this afternoon. If I had a guess, it would be lower. Let's go market. Carrot. Carrot wins again. Ta-ting. Ba-boom. Look at that. 534. Have a nice day. We don't know yet, Russell, right? We just want to see 534 get closed below. Right there, right? And we go back to our friend. Where's our friend over here that was fighting for so gallantly to try and hold back price? I can't remember which candle that was constantly trying to get up there. And it was holding back price. There, now we're below that level, 534. We come back up to 534 and we keep coming lower. Right there, continuation. There's your answer, Russell. Keep coming, baby. We're looking for 517 now. Let's put the carrot down here. Let it munch around here. Enjoy the carrot. Okay, let's go to 517. And then we're looking for 488. Or take this into, I'm looking for 503. Let's say 503. Right there. So now you're just looking for, now that you've got this higher time frame objective hit, right? What are we looking for? Tell me, Russell. What are we looking for? When you hit a higher time frame objective, what are you looking for now? In this chart, well, this is a 15-second chart. Let's go to a 1-minute chart. Never doubt the 950 macro to deliver. (15-second) chart. Any signs on the 15-second chart? Yeah, go to a 15-second chart and you're looking for a reversal now. Right there. Wait for a body to close above this. And this you want to see accelerate through. So come back, give me an opportunity there. If not, then look for the next one. Yes, that's Russell. I like the way you're thinking, man. Let's go along there. Why didn't it give me my long there? What the hell is this? That's a little late to the potty, pal. Well, those were late. I just want to make sure it's below that mean threshold right there. See how it's mean threshold's holding? I want to see that hold. So demand that kind of price action. There's premium box, done and dusted. Move to break even. Doesn't cost me anything now. I'm out. Wait for this to get broken to the upside. I was looking at that mean threshold. Would have been nice to see that hold right there and just start pushing right through that level, but it just came up and filled it. So now we could get a reaction. Now we're coming back into that. That's not what I want to see. So Anyway, we're going to wait. Demand price acts the way you want after being all this shit that's been giving you all morning. Demand that it gives you the level you want. Premiums hit. Uh, 10 to 1010 was, or 1002 was a Venom trade. Michael's Venom trade. Where's the Venom trade? Let's have a look at this Venom. Venom. Oops, that's 15. This is 1. Venom. Oh, this. Oops. Got so many boxes on here now. Venom. That's Michael's Venom right there. You come back into it. Where's Venom? I see his Venom isn't it a retest of this? Isn't that the Venom trade? It's very similar to our reaching for this BISI again. Doesn't this candle here come back and revisit, or the next candle come back and revisit that SIBI, and then it's a Venom trade? Isn't that what he calls a Venom trade? I'd have to look that one up. I'm not sure about that, Ollie. But that's our reversal. His is on this side, ours is on this side. And we did not have ours there either. We did not close below that level. There's a little imbalance right there, so you would have had to have closed below 706 and then retest it for us to go lower. So ours wasn't even there. It's a BISI turning into a SIBI over a high. And then where's the entry though? I get that, but where's the entry? Isn't the entry back on the SIBI for the short? Because you could say, yeah, it's that. But that's not confirmed as SIBI until that candle closes. So unless you're entering in here, as soon as that one is confirmed, you just go, the very next candle, as soon as it opens, I'm going to go short there. And you're already way past the discount portion of that. So I don't see the entry there based on that theory. But I'm probably getting it wrong anyway. This is the only one I can see right here, as this breaker was taken to the downside on a close, and you come back up inside it right here for a short. That's the only, in this whole return, that's the only confirmation I can see for a short. And then wait for market structure shift again. And that would have been just a simple trade here to the box. Hit the box, wait for it to trade through the box, then go short from there. So there's your next entry. Does that make sense, Ollie? That's not a SIBI until that candle closes. And then where's your entry? Okay, right here. That level right there. I'm looking at why is this level so important? Why is 650 an important level? Excuse me. It's 8:30 open. It's also the consequent encroachment of the 3-hour candle. So you traded above it, now you're below it. Discount box is way down here. You got to see this break out of here. Okay, I get you. So you're saying that as soon as you see this venom forming, then as soon as that next candle opens, you go short there. So if it retraced all the way back in here, you put your stop loss above the high there. If it retraces all the way back into here, it doesn't matter. Your stop loss is there. We're just taking that for the short. For in this case, it would have been a beautiful opportunity to catch a nice run to sell side liquidity if that's where you're targeting, and that's where Michael usually targets. Is he doesn't do all this stuff in here. He hunts for the lows. He's got a knowledge base or a skill set that he ignores these data points and just runs straight for the low. Unless he sees something in there, he'll go for the short-term low and then the next low. Time and price, sure. It's not a silver bullet trade, though. Silver bullet would have been a retest of this, or a retest of this, or a retest of this. None of that silver bullet stuff was there. If you're just looking at that pure BISI turns into SIBI and then buy the very next candle at the open, at a time and price, if it's an A+ setup, that's one of those ones where you write it down in your book. I'm going to write that in my book because I'm going to look out for that in the future, Ollie. So thank you again. Got it. All right, make notes, baby. Make notes. Okay, so traded above that level. Nice little tap. Look at that. Little swing, traded above. Give it a nice little kiss. Away you go. Anybody catch that? That's right, but bear in mind the time of this price. If it long want to see. I want to see us hit 8:30 again. This is still bearish for our on this video. He talked about entry on the next candle because it will leave with speed if it's right. If it waffles, you're wrong. Ah, the venom has to take out the highs with the BISI and close back inside with a SIBI. I catch it. Your reversal call. Oh, you caught it? Nice. Good for you, Ali. Your reversal call was spot on. Very clean now. You can jump on any fair value gap on the 1 minute. They're holding. Missed it. Bias screwed me. Just stick with the change in direction there, Russell. Nice. That's a nice little tap there. Glad you got that, Ollie. Or Ali. Ali, Ollie. Now, let's see if we get a little tap on this. And see that go. I'm going to go one long there. And stop loss will go one tick below that low. This little cluster, I don't want to see that get revisited now. Now let's follow the take profit model 1 or 2. Let's have a look what we got here. There. Let's move this to break even. Plus the cost. I got in right at the 50%, so gets to 62. I'll leave it. It's a zero stress trade, so we'll just see if it makes it to 62. And then I'll just move this up accordingly. Look at the ICT unicorn. We look at ICT unicorns totally differently, man. I've actually gone back through his the IO, the index, the little AI, and I've asked, show me your unicorn trade. And his was second stage distribution. So I can't see what your second stage distribution is here for that to be a unicorn trade. And again, he even in his video, he talks about people will define their unicorn setup as something different. But his was second stage distribution. You see reversal, smart money reversal, first stage accumulation distribution, second stage accumulation usually down in here. Then you get this big ripper that goes ripping through, right? I don't see any of that in here. But again, unicorn is not something that I look for a very specific thing for a unicorn, and as he's described it. So I don't know. I don't see the unicorn in there. You'd have to describe it to me, Ollie, or show me on the picture. Show me the first stage, then the second stage distribution on your chart, where you see it, and I'm all for that. Unless he's given another description of another type of unicorn. And I'm not saying you're wrong at all, because I'm 60 now, so stuff doesn't stick in my head as easy as it used to. And I'm always willing to change my mind. If I learn something new tomorrow, I'm willing to change my mind. See, that level did not hold. Not interested. So stop loss was tight. You got to demand that kind of price. You say, it's got to go. Cannot go below here now. It's done its thing. And look at that. It's ripping right through it. Yeah, look at the SIBI breaker formation. Was unicorn out. Look at those 50-minute fair value gaps. I'm out too. We're blocked by Globex open. Could reverse from here. Don't want to give anything back. I'm still bearish. While the 5-minute chart, you're now digging into this little level right here, the mean threshold. See how you're eating through it? So now I'm looking for a retest. If see where you close in the next 3 minutes. If you close below that, I'm looking for a retest of this SIBI down here. And you may run all the way back in there right now. But if this is the reversal, that's Michael's typical run back into this BISI and then go higher. It's already swept all these lows. You got, for us, it's got to be, this has got to get back into here. Michael usually teaches that little change in direction there, back into that BISI, and then go from there. So we're going to wait for this SIBI here, and the ideal entry would be right at 574, and you want to see that hold and that little piece stay open. Stop loss would be down below here. You don't want to see that mean threshold give way. So bottom of this midnight open range. Box right there. Box to box or box. So P1 to D1, D2. Checkmate. Box to box trading, man. You're back into this order block now. Watch the mean threshold. If that gives way, look for your D1, D2. Oh, there's actually a D3 down there as well. And then watch here. So I'm looking for at least 584, which is the midnight open range again, strangely enough. And it's also the mean threshold. Overlapping, hey? Overlapping arrays. Data point, data point, data point. Overlapping. Yes, I hear you. Macro is about to begin, my friends. Start spooling. There it is. There's 584. There's level 1, level 2, level 3. Now 11 o'clock usually takes a run on the last 10:30 liquidity. There's number 2. And there's our box to box. There's D1, D2. See how it's traded through that level? Come back, give it a little tap, keep coming. For us inside this range, D2 is now filled. Now look for D3. And then if you get D3 and we get close at there, we have a little shift here. We have a continuation on the downside. So this pops right back up into, see how we've traded below that level now? I look at this as an inversion on a 5-minute, and I look for this to provide support to go lower now. There, we can trace all the way back up into this mean threshold of the open again and come lower. And that's the clean stuff you want to see. If it starts to rip through that and starts bouncing around and stuff, then it's not really what we're interested in. Looking through, you're right with the second stage redistribution for a unicorn. I was sure he called the breaker paired with the fair value gap unicorn, but I must be wrong. Again, don't take my word for it, man. My memory's not the best, so that's just how I remembered it. There's other people have described Michael's unicorns completely different from second stage distribution for me, but that's just why I had to go back in and check. That's how I see it. But I know he talks about, and some people, it's a personal thing for their unicorn and how it sets up. And if that's your personal way of looking at it, then, and it works, call it your unicorn, man. Because if it works for you, Ollie, go for 5-minute chart. Very nice. Now that's what I want to see. Hold price now. See how it's starting to get through it? I don't like to even see that wicking in there. Right there. That's it. Stop, stop, stop. Fill. Okay. But the wick. That's it. Now keep coming. That's like precise right there. That's all the little wiggle room I'll give you. Get below this level. Look for a 15-second chart. You've hit D2. So you're looking for a 15-second reversal if you want to go long, and you're looking for 15 seconds for a continuation to go short. Or I want to see a body get below here. Body get below D3 and use D3 as support to come lower for our little carrot down here. That aside, the breaker plus fair value gap is an awesome trade. Yes. So agree with you. I so agree with you. This whole thing, breaker inside of fair value gap, it's usually money. Michael says, I remember years ago, Michael was saying a breaker inside of fair value gap, he says, you can bet the house on that. He says it's such a solid trade, right? But here's your breaker, here's your fair value gap, and you still didn't get back into it, which is what we're looking for, right? This is for our change in direction. We want to see it retap this, it didn't. Then we want to see it retap this, it didn't. Then we want to see this breaker here get hit, and then you finally get the breaker right there. So this breaker inside this fair value gap, that one didn't even get hit. You just got the breaker hit right there. Right, usually it comes back to the top of the breaker, the top of the SIBI inside the breaker, and you can nail it and catch a really great trade. But it didn't even give you that. It just caught the bottom of the breaker right here, that little guy, because the body traded below it and then just came back in and grabbed it and tore out of there. So yeah, I love those breaker inside the fair value gap ideas. This is awesome. This is your unicorn setup. See, it's all personal. It's all different for each person. So there's the trade. We have not really taken out a low here. So I'm suspicious of this until we get above here. This is good for change in direction inside this range. And there's your premium box right there. Your bull trap is sitting right here. And we have not taken a low with this swing. We've just traded back into this SIBI, and we did trade through it on a close. And now we've traded back through it on a close going the other way. And you've got an overlap here. This breaker is going to get reclaimed, find some support at that and push higher. Right to the mean threshold, right to that opening right there. There's our entrance back into our SIBI right there. That's got a hold right there. Nope, Don't like that, even wicking through it. Bull traps holding. Mean threshold. See how we didn't take a low out here? That's why it's suspect for me. That's a big retracement all the way back just to fill that one in. And you still got this little guy down here that hasn't been filled yet. So this is box to box trading now. Stop loss will be sitting just below the mean threshold of that candle. Accelerate. Run into your box here. Oh, I see. Sorry, Hadi. That's your unicorn setup. Unicorn is his unicorn is the same thing. It's a setup inside the breaker. He just calls that his unicorn. That's a great trade. That's a great trade, Hadi. How's this? You got a breaker here that takes out all these little highs here. Breaker with a fair value gap comes back inside it. Breaker has its own fair value gap inside. Tippy tappy. You're going to see this go. This whole wick coming back down again, not what you want to see. You want to see this get some acceleration. Otherwise, it's just sloppy price action. It's got no drive to get there. I'm closing out my week green and closing off the charts. Thanks, Darren. Love your channel and your community. Have a great week, and everyone. Thanks, Ollie. I really love your input, man. Please don't ever think that I'm saying you're wrong or anything like that. I'm always keen to learn something new, so I'm willing to change my mind anytime. So thank you very much for being bold and putting it out there, man. And I love it. Thank you so much. I appreciate your time and I appreciate your input. I really do. Have an awesome weekend, man. Ollie, thanks for your input. Yeah, send Ollie some love, man. Sending love, my friend. Sending some love. Have a great weekend. That's a smart guy. That's a guy who really studies his ICT stuff. I hate ever challenging that guy because he's got his poop in a group. He understands. He's studied it really well, and he does some really interesting research as well. Oh, you're still here. Bye. We're talking about you. Go away. I'm okay being wrong. I've been married a long time. Yes. See how we're popping back through there? It's suspect. If it's not taking out a low, it's very suspect for me to get up into that higher range. So I want to see these SIBIs occur below lows. And if you're not getting some really oomph on there, see that retrace? You don't want to see that. As soon as it starts doing that, you go, that's not got some drive to push up there. If that was just coming back in here to fill this fair value gap and then leave, but it already closed below that, you want to see precision, tap it, and with explosive, not just kind of stop there, wait, slowly meander its way up here, and then fail there. Now it's rolling through that level again. Now this becomes inversion. I want to see this here hold price here to roll over and come down, and we'll see if that midnight open helps us out. But I want to see this start to take this low out here now, and then start aiming for D3 here. We got some great people in this community, I tell you. There's some really smart people. I'm grateful for everybody, for all of you guys who tune in. I'm grateful for your subscriptions, your subscribers. It's all free, man. Nobody's trying to sell you anything. We're practicing here every day on how to stay in the charts and read the chart with precision. We're looking for precise data points. It's not a general idea now. It's specific data points we're looking for. And you're seeing a level of accuracy when the charts are clean. You see them just so beautiful. They're just so clean. It's our idea of staying on the horse. So subscribe, like if you're here. You're new to the channel. You're welcome. Nobody's here to judge you. You give it a go. And everybody, even if you're willing to be wrong, you notice nobody's here to shit on you. We're all here just trying to learn, do our piece. I don't mind being wrong. You've seen me take trades and get my ass kicked some days. So especially if I get impulsive or I don't follow the rules and the rules that I make for myself. And if I don't follow them, I was talking to my shrink yesterday. I'm going to share this with you guys. I was talking to my shrink yesterday about, hey, I still have this impulsiveness that I hate. I know I'm doing something wrong, but I impulsively will go in and still take a trade. And then I'll tell people, don't do this trade while I've just taken that trade. And I said, why is it that I can look at it and I go, you're wrong. You're on the wrong side of this. Get out. What's the need to argue? And I've got this terrible thing about bucking authority and being a rebel. I've always been a bit of a rebel. Not a bit. I've always been a rebel. So it was kind of an interesting come to Jesus moment where I was like, if you made the rules, whose system are you bucking? Who are you arguing against? Who's your victim? Who's the victim here except you? If you made the rules, it's your rules. Who are you fighting? You're fighting yourself. And I was like, holy crap. That's so true. I'm not bucking the system. I'm bucking my own rules. I've got so used to nobody tells me what to do. I'll do my own thing. Even when I give myself rules, I'm like, don't tell me what to do. It's nuts. It's craziness. Treat it like a business, man. If that's your rules, follow the freaking rules. You got to make rules. If you have no rules, you're subject to chaos. You're subject to fear of missing out. You're subject to impulsiveness. And you got to follow them. And you got to be religiously stick to the rules. And if the rules get violated, you got to say out and be willing to take losses. That's why we practice here every day to stay in the charts, on the data points. Because when that data point fails, that's where the trade fails. That's the point at which you take over the psychological game. When the charts show you ones and zeros and the one switches to a zero and changes direction on you, if you don't close your trade off there for long because the data point just went, I got broken, it's coming back to give you an opportunity to get back in line with the market. If you don't recognize that as the opportunity to turn, it's no longer trading, it's you dealing with your psychology. That's all it is. That's why you take your emotion out of the game. The moment it switches on you, you've got to be like a robot and say, I'm out. That's on the wrong side, and be okay with that. If you feel your skin flushing up and you feel your face getting red and you feel your emotions kicking in, you've now switched from trading to the psychology of fear of missing out, money, greed. That's no longer trading anymore. That's the data point. It switches from trading to brain and fear and emotion. If you don't recognize that, you're trading on fear and emotion, and now you're like, shit, I'm out. I just got beat up. When you could say, nope, that's a nice little data point. I'm going box to box now. Boom, boom, done. You got box to box trade, and you go, that's it. Emotion out. I'm in. I made my money. I'm good. The moment it trades, it goes through it. I go, great. Now, if it comes back inside that range, I'm going to trade that. The moment it pops below it, I'm out. That's my loss. I'm out right there. Comes back in, gives me an opportunity to get out of my trade. I wait for something clean to set up now. That's pure data point trading without emotion. Does that make sense? You got to be solid on your rules. Because if that you feeling the emotions kicking in and you're holding onto a trade, or you're feeling impulsiveness, or you're feeling that need to chase after a trade, you're not trading anymore. You're not trading anymore. You're totally running on emotion. And this is an algorithm. It has zero motion. So why bring yours to the game? How's that? That's my logic for the day. I need to be done also, except for crude oil. I haven't even gone through any of these today, so I think I'll have a quick little peek through that. Look at 7:55 and 8 a.m. candles on the 5-minute chart. 100%. Look at 7:55 and 8 a.m. 7:55 and 8 a.m. Yeah, that's the market structure shift. You come back into it, you traded below it, come back into it, you go short, that's there. You've come back into it again and it rolled over on you, traded through here, and now you're banging around inside here. So that breaker right there is holding price. Yeah, I agree with you, D. Hold price, sent it lower, yep. And also we have a 5-minute short, 10:05. Price came back to that several times, also 50% of the range. So no long for me at this time. Need to close above the 5-minute. That's all you need. Now we're back into choppy, sloppy price action again, right? So wait for us to get out of this range. You've done your box to box trade inside that internal range liquidity. All you've got in here is this one to that one again for internal range liquidity. And if you look at using your fib tool, if you went in here and you got short here, 50% has already been hit. You didn't even get an opportunity to get in on that. 50%'s already been run to, and now all of a sudden it's run back through this level. Now it's run back to that level and just popped through it there. So you're below it, you're above it. So now instead of getting beat up in here thinking, okay, now it's going to go higher. Okay, now it's going to go lower. Wait for market structure shift. You got to wait for it to get below here and D3 or above here. That's what I'd be looking for on a 1-minute chart. A 5-minute chart, you're looking for this candle to get broken or this candle to get broken. You only got one level and a overlapping. Like if you take this here, let's look at the 5-minute chart here. Look at the 5-minute chart. A small little leg here. There's 50%. That means all this to here is premium. And all this to here is discount. You change up the color a little bit. Oops. Premium, discount. So watch how it acts inside here now. See how you wicked up into the premium over and over again inside that leg, and the discount is really heavy on the trade, the volume or the mass of the trades are all falling here. This is all that paint attempt to get up there, right? Into the premium. You wick up all the way to the top of it. Bounce, bounce, bounce. We're back into that discount. And now you want to see this mean threshold give way at 70. And then push through for mean the rejection block. 88% sitting right on. Oh, no, it's not. Let me see where this is sitting. Let's do this with the wick. So there's 50% of the wick. Body's respecting it. Went higher. come back down, and we're just digging into the 25. There's that another pump back up into the premium again. So we see how the bodies are not really getting up into that level. So just kind of watch it right now and see how when you've got this overlapping arrays, that's how I split them up. And I kind of take half of them and say that right there is the premium side. This is the discount side. Let's look at the rest of the charts here. That chop. Look at that chop. So we have traded back up into this breaker. Nicely traded. This is a 5 minute, same kind of thing that we were looking for. Hadi was just mentioning to you guys about on the NASDAQ. Here's your ES. Trade back into the breaker. We've traded below it. Now you want to trade back into it and get short. So you can start shorting here, here, anywhere inside those two candles. Your stop loss would be sitting just above there. You're right up inside it, and then you went lower. You trade through this level, you think, great. Now, if all I want to do is trade back into that level and then continue market structure shift and aim for this liquidity down here and look for this box right here. I'm looking for that. So you trade up here, trade through that, go great. Confirmation, trade back into it, get short. Short. Now you want to see this rejection block, pay yourself here. You got in there, pay yourself there, pay yourself at 50%, pay yourself at the low, or wait for the lows. And your stop loss, which when you entered in here, stop loss would be your back in profit again. Because why? I don't want to see these two levels get traded through on the upside. So my stop loss will be in profit right here. I don't want to see that fill. You want to see this stay open, a portion of this stay open, and send it lower. And see how you're waffling back and forth here? How many candles do you want to give yourself before you give up on that and say, screw this, I'm done. I'm not waiting for that anymore. Or you just leave yourself in risk-free trade and just let it run. Zero emotion, let it run. If it comes back and takes you out, who cares? Don't look at loss. Look at, hey, I made some money there. And I was at risk-free. I paid myself at the rejection block, and I'm waiting for my next target down here. Because, my friends, this could be a huge run. This could be a huge run. If this is the next price leg lower, I'm looking right there. Just as an idea area, not a absolute. Okay. So if we can get through that level, then I'm going to start targeting this Thursday's first presentation again, and I'm going to start targeting for this down here. Oil. Oh my goodness, oil was a nice little trade today, Craig. Look at this. Oh my God, look at that trade. Look at this trade on a 5-minute setup. Jeepers creepers. Oh, look at that lovely trade. Oh. Why weren't we looking here, Craig? Why weren't we here this morning? Look at that little box, market structure shift, trade above it. You come back right to that box, and this cluster of up close candles, mean threshold of all of them, like draw them out, man. Draw from there to there, and look at the there to there. Look at that. Look at that, 50%. Isn't that beautiful? It's like, you can't ask for more sexy than that. Sexy thing. It's a sexy thing. Dang. That's like precision. And then you're looking for premium array. So look at premium array. Premium box to box trading. Then we want to see it close above it, right? Then we want to see it come back and tap it. Look at that. More precision. Are you guys seeing this? This is not some random crap going on. That is what we're showing you every freaking day. Box to box trading. There's your box and you say, I'm out. Now wait for market structure. Wait for it to close above it. If it takes me above, I'm looking for market structure or the extension. And then I'm looking for a retest of this whole breaker there at 50% like we did over here. Or we're just looking for a retest of the premium box. Retest of the premium box. And then you want to say, oh, look at that go, baby. You come back down. Wait for this to break to the upside. It comes back. Oh my goodness, can you see more precision? All the way back to the high. Small little change in direction here. Right there. Trade back into it. Continue the rejection block. Come back up. Support. Roll over. Take this side. On the downside, you're inside this range here. You say, there's my discount box. And that trades all the way down into here. So this is all imbalance in here. All the way down to there. Oh, look at that. Precision. And then all of a sudden it runs back up. We say, well, if we can get above this little candle here, I'd be happy for, oh yes, a mean threshold. And then keep going higher. Take that high out. Come back and give me a little kiss on there. Run back up. Does it give you right there? No, it doesn't even give you there. So you wait for the next one. Here. Trades back above it. Comes back. Gives you a nice little mean threshold kiss right here. Higher, higher. Oh, Craig, this was beautiful this morning, man. This was absolutely delish. Delish. Crude was a very nice, that's a 1 minute chart. Dang, bro. I hope you guys saw that because that is some sexy thing. Oh, Bitcoin, eek. Bitcoin's not your pleasure zone, my friends. Not your pleasure. Gold. Hold for gold. Look at that. All the way back down to that D2, D3. 1, 2, 3. There's D3 hit. Held. Market structure shift. Comes back, taps it, comes back up to the premium box, rolls out of the premium box, all the way back to the discount box, hits the discount box, box to box trading right there. Hits it. You want to see a body break above the candle to the left, which is, there's nothing really in here. So wait for this structure to break to the upside. And it breaks right here. You come back to the to the premium box. You come back in, give it a little tippy tappy right here, and then off to the races you go. It's the same thing, my friends. Tune in every day. You'll see the same shit over and over. Look at the pigs. Abs. The pigs are on the run. We called that pig thing back here in August. Hot damn. You're still in that? Shit, you got some pig poop on you. Sugar. Sugar is sweet. Wait for a market structure shift here and then start gunning for this premium P1, P2, and P3. Or just do one giant P1 into here. This is what I mean by this. If you're looking at sugar, I know you guys aren't trading commodities, but that's what I'm looking for right there. We break above here. Obviously, you're going to hit it. It's pretty close. We want to see if this bull trap holds. And we'll see if we can get this. This would be nice to see this close here today. Tomorrow, or sorry, Monday, come back into this level before you take this and then see that run from box to box. That would be delish. I bought this years ago, and I'm underwater in this thing when I didn't really realize what the hell I was doing, and I'm waiting for this to get back and almost break even right now. I think I bought it at 48 cents, 49 cents. So I needed to get back up into here, make a bit of profit, and finally get out of this damn trade. For years I've been sitting in this thing. Ford, you're not giving me what I want, so we'll wait for October or wait for March, April next year. Disney, despite the Jimmy Kimmel sell-off, we call this the Jimmy Kimmel sell-off right here. The Disney lost a lot of money in that whole Jimmy Kimmel thing, and they're not recovering too well right now in terms of their market. So I'm still looking for all this back here to get retested, but I want to see this watch level I've got sitting here. Amazing how precise that is, hey? A drop back. It's not like just some random line I put in here. So, oh, did you see it, folks? You saw it right here. I gave you silver. We're at a discount. We're looking for silver to run to our level that was up here somewhere. We hit that level. Then we hit the second level, third level, and now fourth level's hit. It's eating carrot right now. It's enjoying a little feast of carrot. There you go, my friends. There's the 41.56 in silver. Delish. Now the next level I'm looking for is right here. 43.62. Silver. Finally kicking out the way we want it to. Look at these guys. Nice. Pay the trader. Pay the trader. Good. See, now we're back above that level. That's good. Nova Scotia, nice little recovery yesterday. Come back, find some support at that. Keep going. We're still inside that range. So that's all looking good, Gary. Keep it going, buddy. Stay in there. Laurentian Bank, hanging in there. Let's go. Motivation, brother. Let's go. And where's our DAX? Do we not have a DAX in here somewhere? Target, our little Target. Where's DAX? I thought I had DAX in here. Euro. Let's quickly do some Forex. My Forex friends here. 5-minute chart. Look at this. SIBI. Wait for a body to trade above it and come back into it. It trades above it. Do you get a chance to come back into it? Nope. So you wait for the next one, which is this old high. Do we trade back into the mean threshold of that candle? You certainly do. And then you went higher. Look for this mean threshold. Oh, look, you hit it. And then you rolled over. There's a small little imbalance there. You trade below it, trade back into it, run lower. We'd be looking for down here. If we break below here, we're looking for a retest of this and then go lower. It didn't. It ran back through that level on the close. You think, okay, now I want to see it close, stay above here. It went below it. So you move to the sidelines and wait for a market structure shift. And you don't get a market structure shift till here. Comes back in. Supports off the last candle to the left. There's your change in direction. Large candle. Look at the candle to the left. Trades back into it. Runs higher. So where are we at now? So we're hitting short here. Got nothing here. So I'm looking for a short into this. Tap, go, great. Reverse here, short. We want to see us get below this little breaker. If we can get below that little breaker, I'm looking for 116.82. 116.82. to 116.85. 82 to 85 is where I'm looking for next on the downside. Got to break through here. You're literally on it, so that's all you've got to hold you. If you get back through 116.97 on a close, look for continuation on the upside. Where is our DAX? I had it. Oh, there it is, Mr. DAX. Ali wants to see the DAX. What do you want, Ali? Do you want a 1 hour, 4 hour? What do you want? These are the upsides and downsides we had. Look at that box. Mean threshold. Mean threshold. Mean threshold to mean threshold. It's like box to box trading, man. When you see it there and you go like array to like array, and it does the same thing on the opposite side. It's just like box to box trading. I used to call it like array to like array before I came up with box to box. So this is like to like. That's all that is. That's really neat. So you want to see a body trade above that, come back inside, push higher, take the high, looking for this level here to give way and run for these highs again now. Kind of a lot of chop in here. That's got to hold. If you see that close here in the next 45 minutes, come back, find support at this candle. It's high or it's open. You don't want to see the mean threshold give way. Tap it and start pushing for this rejection block high and then rejection block high, which is also inside this premium array here. So you're looking for this to get stuck in there. Let's put our little carrot in our box here. Oh, you want the 1 hour. Bottom of the hour, Crazy Ivan. It's Crazy Ivan. There you go. Trade it above, come back, give it a tap, pushing higher, look for our carrot. I'm looking for a rejection block right there at 781 and then the carrot. If you've caught that already, Ali, you should have seen that already. We've also traded above this little area here, come back, found support at that. Now you want to see a body get above this candle and use it for support. If you don't run for that right away, look for a body to close above here and use this candle as support. You don't want to see its mean threshold get taken now. I like that. Keep coming. So yeah, upside for that. Done for the day. See you all to Monday. Thank you, Darren. You're out of here. D. See you later, buddy. Have a great weekend. He's probably not here, but we're sending him love anyway. Sending love, my friend. Do you think TD is a good brokerage account to open? I'm not crazy about TD, but just my view. I'm not crazy about it. There's some few sketchy kind of I didn't get the money I was looking for off of a trade that they were liquidating a Russian stock I had before the war, and then they froze the account, but they're selling it off. I didn't get a promised payout that I was looking for, so I wasn't too impressed with that. Not long yet, so TD is good. I have them for swings. Oh, you mean like TD as a good brokerage account? I'm not crazy about, but TD as a good trade setup, from a bank perspective. Do I even have TD in here? Laurentian Royal Bank, no, Canadian Bank. Let me see if TD's in here for let's put Toronto Dominion in here. Let's have a look at TD as an overall trade. So look at that. Those giant stabs, hey. When I see big candles like this, I look at it as this. It's kind of pointing the direction where it wants to go. Even though it's coming all the way down here like this, it's just running down for liquidity. But that's the target it's set for itself to reach for. It finds it. That's the next target. So the little downward run, that's the next target it wants to reach for. Whenever I see those things, I just look at it and go, that's a target. I want to see it reach. Anyway, so we're looking for it to break through here, right? On the upside, right there. And what does it do? Comes back, taps it perfectly right here at 105. You can go long at 105. That's the rule. If your emotions are telling you, after following our rules, doing our rules, you're saying, that's way too big an opening for me. When has our rules ever said to think and be worried about big open candles? Or do we say, I feel more comfortable with that? Why? Because if I'm wrong, it's just a small stop loss. When does it change? This is only psychological, man. That's all in your head. So you'd be scaling in one there, scaling in, if you broke it into quarters, scale, 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 scale. If you're on the wrong side of it, it'll trade all the way back through here. But you'll see that if it switches through here, like if you're already up here and you're seeing market structure shift already, you know you're on the wrong side of it long before that thing ever fills. So anyway, there's your entrance there at 105. And you're targeting obviously the high of that candle because there's nothing else in there. So you watch. So you target here. You've got the, you gapped up. You came down, tapped into wick, body. Doesn't matter. It's gapped open. Change in direction. If we can get below that, you do get below it. And then you go, where inside this range can I reach back for? This right here. If you're trying to trade this on a day-to-day basis, then you'd be out there. And the moment it gets above it again, you'd be back in. Now you're back in. So the difference between getting out there and getting back in there, comes back, taps you, takes you higher. Whatever little loss you took there, thinking that was going to go short again. If you're using your take profit model 3, let's say, and you see it close below that, I'm out. As soon as this opens tomorrow, I'm out. Or as soon as it comes back in there, I'm out. And I'll wait for it to get back through that level. It does. Comes back, taps it, goes higher. Change in direction. You don't want to see it trade back through that level. Runs higher. Pay yourself. Finally runs back all in one day. Comes back. Discount. You want to see this area. Once you break it, you want to see that area provide support, right? Comes back. Provides support. The bodies respect it. You run higher. Find support. Get a candle that closes above this. It does. Tap, tap, tap. Off you go. We don't get a body trading through it. You're coming back to 50 cent or that this little leg here. Run higher. It gapped way up here. Did you pay yourself here? Look at this. This is how it would have opened. If you say that's my stop, my take profit is right there, right? It literally gapped up there. That's where your profit would have been taken or given to you. The first printed price action up here. That's the thing about gapping up. When it's in your favor, if that's where your stop loss was sitting and it opened up there, that's where you get paid. Not here, up there. So you would have got from 108 and you would have got paid at 111. That's the joy of that crazy one. But you would have been at 105, got paid at 111 right there at the open. That's crazy. Yeah, so TD, like anything, it's running the algorithm, man. Nothing freaking changes. Nothing changes. Anyway, I think that's it. I'm down to 16 people here now. Do you think TD is not a bad day trading day as well? 1 hour, whole month DAX had box to box movements. Did it? Let's look at a monthly chart. Here's your month to month, box to box trading. Right here. That's a discount box. To a premium box. One month. Discount, premium. Went through the premium, back into the order block. Didn't quite tap the old high, so you wait for a body to break above here. It does. Comes back, taps it, you go higher. So for 1, 2, 3, 4, 5, 6, 7, 8 months, you got all through 2011 just trading that principle off a very precise. This could be a 1 minute chart, you guys, right there, off DAX in February of 2021. You took that long. You could have caught that for 8 months into September, August. September to October. October makes a new run up for a new high. Seasonal tendency. August, September to make highs. Run down in September into October, run down into October, make a new low. October makes a start to make the run higher. There's your November, makes the new high. December, January, then your February, March. April, May makes a little high, then it reverses into July and August again. Those are seasonal tendencies. Come all the way back down into our little discount box here. I don't know why I wrestle with that all the time. Just move the damn chart. Take it all the way up to here. Sorry. You got to include the imbalance there as well. Comes all the way back down to the imbalance. Wait for the candle above you to get traded to the candle to the left. There's a small little change in direction here. You wait the whole month. Did it come back in there? Nope. Wait for this candle to get taken on the upside. It does. You have to wait 2 more months later before it finally comes back to it, catches it, and you start running higher. Rejection block, old high taken. So from here to here to here, that's a lot of months. 1, 2, 3, 4, 5 months later, finally takes the highs. Pay yourself. It's a 5-month trade. Body breaks above an old high. Like a 1 minute chart, my friends. Like a 1 minute freaking chart. Retest. What about the high or the close? What about the mean threshold of that candle? Right there. Mean threshold right on the money. So your mean threshold comes down, taps it, and goes higher right there. So now you say, now I'm going to go long. So for 1, 2, 3 months, do we have a reversal? If you're using a take profit model 3, no reversal. 4, 5, 6 comes all the way back down, gives you a little scare, fills the fair value gap. 7, 8, 9, and you're just running. You've been in this thing for 2 years and it's still running higher. From a perfect entry point right here. The same thing we teach you every day on a 1 minute chart. There it is on a daily or on a monthly chart. Same freaking thing. It's fractal, what we teach every morning, you guys. Anyway, enjoy your weekend. That's it for me. I'm out of here. I hope you've enjoyed the show today. I hope you've enjoyed the accuracy and the multiple markets you can see this stuff on. And hopefully I didn't babble to you guys too much. But anyway, I hope you guys have a great weekend. Much love to everyone. You guys have a safe weekend. Be kind to each other out there. Remember, violence doesn't solve anything. Be kind to each other. Solve your solutions with good, solid communication. Be open to change your mind, because we're not always right, man. We're not always right, and it's okay to be wrong. So have a great weekend. Love you guys. You guys mean the world to me. I really do. I really appreciate every one of you. Thanks for tuning in. Even those quiet people in the background who aren't saying anything. I appreciate you all being here. Have a great weekend.